For the next sharing section on how to optimize investment portfolio with ESG analysis, we are honored to have Mr. Stephen Andrews, Managing Director, Global Emerging Markets Equity from BlackRock, one of the world's largest institutional investors. Mr. Andrews is a portfolio manager on the Global Emerging Markets Equity team within the Fundamental Active Equity division of BlackRock's Active Equity Group. He manages the Global Emerging Market Equity Income Strategies. He is also research part leader of the North Asia Financials, Real Estate and Technology part for BlackRock's Global Emerging Markets Equity. Please join me in welcoming Mr. Stephen Andrews.
I'd like to start with just two thank yous. Firstly, thank you all for coming and to listen to what we have to say today. And thank you to our hosts as well for putting this on. It's very important that we all get to talk about these things. And my third thing is an apology. As you may have noticed, I'm English. And the English are good at many things, but foreign languages is not one of them, I'm afraid. So I will give my presentation in English today to save you all of from my tie. So what am I going to cover? What do I do at BlackRock? Well, I am a portfolio manager. That's what I do for my day job. But as part of that, I'm also in charge of integrating what we do from an ESG perspective into our investment processes. So what I don't do is I don't write those great think pieces we see about plastic in the ocean and climate change. My job is actually to go down to the portfolio level with the investment teams and actually change how we invest in these companies and how we move capital around the world as a result of these trends. What I want to do for you today, though, is I know many of you are investment professionals, is to give you an idea of what we do at BlackRock. How do we do this on a day-to-day basis from the top down all the way into the investment process? So hopefully you'll be able to take something away from it and use it at your own firms. The first thing I wanted to do was just cover. This is pretty well covered, I think, by our previous speakers. But one thing I will do for those of you taking notes is give you a key takeaway for each slide. And the one for this is what I would call aligned alpha. I can look at blank faces. What does he mean with aligned alpha? What I mean by this is that ESG means something different to everybody. If I was to ask this gentleman over here, don't worry, I'm not going to ask what ESG means to him. I'd have a very different answer from asking this lady over here. So not everybody has the same perception. But what this means as a portfolio manager is historically, I used to go away and manage my portfolio, and all I had to worry about was generating alpha on a 1, 3, and 5 year basis. That now is shifting for the first time. And what I mean by aligned alpha is now people now want their money managed, not just the alpha generation, but in line with an underlying set of beliefs that they hold dear to them. So it's aligned alpha in that it's alpha that is generated aligned with how they want their money managed. So we pride ourselves on our technology at BlackRock, as you may know. This is my own pathetic attempt at big data, so I apologize to BlackRock's big data teams. This is a bit basic for them. But your takeaway for this one is tidal wave, I would say. This ESG is a tidal wave coming towards us. I'm not going to claim credit for that. That was Larry Fink said this is a tidal wave, not me. But what this shows you is this is just a Google search data looking at ESG and how fast interest in it is rising. I've put it on against things like passive investing there, and you can also see it against big data. But this is absolutely flying towards us at a million miles an hour, and there is an awakening going on amongst the asset owners in this world, pension funds, et cetera, that they need to build this into their investment processes. The pace of change is quite breathtaking. Just on to how we do this at BlackRock. I think that the key thing from this slide, your takeaway, I would say, is tone from the top. You will have saw on the previous presenter talking about Larry Fink's My Boss's annual letters. He has talked about purpose in those significantly. So within BlackRock, this is embedded in what we do across the firm now. So what I've tried to do on this slide is just break this into 5 different areas to give you an idea of how we build it in. And I'll elaborate a little bit more on 3 of them in a minute. 2 of them that I'll just cover in this slide, though. Firstly is investment insights. Within BlackRock, we have 2 big organizations. One is BSI and one is BII. We like abbreviating everything within BlackRock. So BSI is BlackRock Sustainability Institute, and BII is BlackRock Investment Institute. These are headed up by a gentleman called Philip Hildebrand, who used to run the Swiss National Bank. And their role is to do those think pieces. Their role is to lead in terms of thought leadership, in terms of what we're doing in their space. So we have BII and BSI offices are based all around the world with BlackRock to drive the thought leadership. The investment processes, the sustainable solutions and investment stewardship, I'll touch on in a minute, but the corporate sustainability is also another important one in that you have to practice what you preach in your own firm before you go out and tell other firms how to do it. So that's another important aspect for us. Engagement. This is one thing I think that BlackRock is trying to do more and more and more of. You don't bring about change unless you have conversations. So this is us about having conversations with the companies that we invest in. And we do this on a number of different levels. One of the ways we do it is through BIS, another abbreviated name we have, which is our BlackRock Investment Stewardship. So what does this team do? As you can see, they're spread all over the world. There are 40 to 50 people involved in this now, and their job has evolved over the years. This really came about in 2011, and initially this team was involved in our proxy voting. So obviously, the beauty of BlackRock is we own a large amount of shares in almost every company in the world now, so we have to be actively involved in a voting process. But that role has now evolved over time. So what the stewardship team now does is we also engage on ESG issues. So through engagement, what we're looking to do is having conversations to discuss best practice in areas like governance. So we will go out and meet with the corporates, we'll create our own governance score on the companies which we use internally and help prod them in the right direction in terms of what they're doing. And where necessary, we'll be more active in terms of voting at board meetings with things we're not happy with or we don't think are in the interests of our investors. So this next slide, your key word if you're taking notes is embed. In that, how do you do this from an investment team? And I think that what this shows you here, and I used my own team as an example, this is all those handsome chaps and good-looking ladies are the Global Emerging Market Investment Team at BlackRock. And what this does, this shows us we're an advantage in some ways, and we run one platform. So across the whole of active equities, in emerging markets, we run one platform, so we are one team. So we don't have different teams doing different things. I think when you're doing ESG, one of the most important things you do is you have to embed this philosophy with the investors. Because it's the investors that are allocating the capital in active equities at the end of the day. So when we see people setting up big ESG functions that are separate to the investment teams, that's not how we've chosen to do it. Because the level of communication and understanding how these companies work, the real knowledge base, sits with the analysts on the ground. We do, as you can see, Josephine there, we do have an ESG specialist, but her role is not to do ESG for the team, to be very clear. Her role is to help us put the process in place so the responsibility sits with the whole team. And it's having that embedded in the process with your portfolio managers and with your investors, with the people who are actually making decisions and interacting with the companies on a daily basis that we think makes the difference. So you can see that in each of our research pods that we have around the region, we actually also have an ESG lead who's responsible for looking for areas where we can engage with companies and move them in the right direction from an ESG perspective. This one is just to give you an idea of our active equities investment process in a slide. It's quite difficult to do, but your key takeaway here, I would say, is materiality. So within our investment process, we have this embedded in what we do from day one. So, and we use technology a lot for this as well. So when we go through our investment process, the ESG discussion happens at a very, very early level, and it's part of the debate. We have what we call our ESG Risk Window, which you can see there. And the materiality issue comes into it. Not every issue or ESG issue is relevant to every company. So what we tend to do as an analyst team when we are looking at new investments, what we ask the analysts to do is, what are the 3 or 4 most material ESG issues that are relevant for this company? It will be different, for an oil company it may be more obvious, but for a bank it may be something else. For a pharmaceutical company it may be more social rather than environmental. So what are the issues? And then the important thing is to track those over time and engage with them. So we talk to the companies about these issues in our day-to-day meetings. And we also talk with, as I said, our stewardship team, and we often do joint meetings with them as well. So just to give you an idea on this engagement, because when it comes to ESG, we'll talk about screen products and those sort of things in a minute. Screen products don't necessarily change much. You're excluding companies, and by excluding them, you're not necessarily having a conversation with them. You're not necessarily moving them in the right direction. So what we're trying to do at BlackRock is actually engage with companies and say, hey, how about doing this differently? And what's been fantastic for me since I've been in this project is how willing companies are actually to take on board advice. In fact, we've had a large number of companies, including Thai companies, come to us and say, how can we do this better? What this gives you is just an idea of the different levels of engagement that we do. This is standard. We do this across our developed market teams and our emerging market teams. It's also important communication across a big firm like BlackRock. I'm sure we've all worked at firms where communication is an issue. So you can see on the right-hand side there where the investment teams start getting involved with our stewardship teams on more important issues that may involve voting intentions. But ESG can be very simple things. You know, we go to Korean companies and we say, look, you have an international investor base, how about putting your results out in English? Simple things like that can help improve governance, all the way up to the most complex things that we do, where we're actually voting at AGMs, sometimes against companies or management's wishes. So having an engagement framework in place, a process in place, is very, very important for how we do this. I think that if the team had one catchphrase for me, they call me process, 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 because much of the last 2 years in our investment teams has been about putting process in place to make sure that you're doing this properly. Now I just wanted to talk a little bit about different strategies, because there's a lot of abbreviations and a lot of assumed knowledge in this sort of space that everybody knows what sustainable investing is. Everyone knows what impact investing is. Everybody knows what ESG is. And it means different things to different people. So this first slide, your key takeaway for those that are still taking notes, is scale. What I wanted to do was to give you an idea of the scale of this within BlackRock already. Just as a reference point, BlackRock now manages about $7 trillion globally. So it's the biggest asset management company in the world. And this gives you an idea of how close or how big the ESG aligned strategies or linked strategies at the moment are. The simple screen stuff you can see at the moment is by far and away the biggest, about $500 billion. And then you've got what I would call more mainland ESG, then thematic and impact. But what this chart doesn't show is the pace of growth. The pace of growth is absolutely astonishing in terms of how this is changing now. I've been in the investment industry for 20, 25 years, and I haven't really seen anything change sentiment and the way processes are done with investment firms as much as this is today. Returns. What can we say about returns? Often when we talk to our clients, the first thing they say, if I'm going to have an ESG strategy, what's it going to cost me? Well, the honest answer is we don't know, because there's insufficient data to be able to say that this definitively adds alpha. We can't say that yet. What we can say, though, however, is it doesn't seem to detract alpha. So if I was to say it may well over time add alpha, but it does seem to lower tail risks as well. You know, and this isn't all, I would say, entirely new. Investing in companies that have good governance and good practices has been around for a long, long time. So just to give you an idea of the sort of strategies, this is moving in closer to active equities now, in terms of the sort of products that we have and the definitions that we're dealing with. And you can see on our nice ESG leaf here, we have 4 different strategies. The first is simple screen products. So what do these do? This is taking an index, just an index product, an MSCI index product, and screening out certain industries. It's very crude, very basic, but that's what some people want. So we take our screens from BSI, which are linked in with some of the UN goals. So it'll be screening out things that won't surprise you, fossil fuels. It'll be screening out, in some circumstances, tobacco products. But again, some of it's quite regional. You know, you have a conversation with an Australian client, they'll want something that's screened out that is different to a Scandinavian client. ESG, this is more mainline scalable solutions, and this is what's really embedded into to our mainstream products. Thematic, we run a large number of different thematic funds. These can be anything like we've recently launched one on the circular economy. This can be the Future of Transport Fund we have, which looks at investing in new technologies. And then the last one I wanted to mention was just impact. What is impact investing? Impact investing is where you have almost a dual mandate, where you're looking to generate alpha, but you're also looking to have a measurable impact on on some sort of goal or company that you're investing in. So we've had a reasonable amount of success in this area. We recently brought in a gentleman called Eric Rice, who's one of the world's leading impact investors. It's brought a huge amount to the firm in terms of what we're doing there. One thing with impact investing relative to broader ESG strategies, I would say, is it tends to be a little less scalable. The reason for that is just because you have to measure what you're doing. And if you're investing in a big company, measuring individual sustainability benefits can be much, much tougher. So it tends to lend itself to smaller strategies. So with this slide here, I just wanted to run through some of the thought processes that we had in terms of how we think about doing this within our active equity team, specifically in GEM, in the global emerging markets. And your takeaway for this slide is what I would call directionality, which is not something that actually really has been touched on here today, but I think is very, very important for understanding ESG investing and how you go about it. You've got your screen products. A lot of other funds are looking at mirroring benchmarks that screen out the poor performers. The concept of directionality is really about talking to people and companies that are not good at this. If you really want to drive change and make the world a better place, sometimes you're better off going to a company that isn't good at this, having a conversation with them, and they want to change, and helping them change. And there is actually a fair amount of evidence to suggest that that directionality in terms of generating alpha in a portfolio matters more than the absolute level. So when we're running our portfolios from an ESG perspective, we do look to engage with companies through our analysts, talk to them, get them to change the governance practices, and get things moving in the right direction. So that directionality is very important. The lead here is lead, I should say, not lead. We don't want it sinking like a heavy weight. It is lead. The L is a local approach. As I've mentioned before, if you have a conversation with people, you have to be sensitive to local customs when you're dealing with ESG. A conversation with a Scandinavian pension fund will give you a very different ESG mandate to if you go to Saudi Arabia and talk to them about ESG. The local for us is also about having a local presence on the ground. If you're going to do this well, you need to be talking to companies and be familiar with management so that you can build up that relationship and trust. So BlackRock's fortunate in that regard that we have active equity analysts on the ground in most places in the world that have built those relationships. The easy engagement, hopefully you've caught on now that the engagement and talking to people on this is very, very important. So we do that through our stewardship team, we do that through our analysts. The A is adapting, and what do I mean by adapting? ESG is not a static space. It's evolving rapidly. What's socially acceptable today may not be acceptable tomorrow. So if you're looking at an ESG strategy or developing an ESG strategy, you're going to be able to need to adapt over time as this entire space evolves. So lead is a bit cheesy, but it gives you an idea of the main things that we think about when we're developing these strategies. I just wanted to finish on this with 2 or 3 examples. All of these are within the last 2 or 3 months. They're kind of fresh in terms of actual engagements we've been doing with companies and portfolio actions that we've done. This one was a Chinese insurance company, announced a large capital increase, was no real reason for it, engaged with them, they weren't going to change their mind, we weren't happy with it, we didn't think it was in shareholders' interests, we divested. This one's an interesting one. This is an Indian construction and engineering company, which we had a holding in. The problem they've had was that it was to do with nasty weapons, basically, and that they had been accused of building a platform that you could launch cluster munitions off. The company's official line was that we don't do this anymore, we haven't done it for a number of years, and that indeed, if you went through a lot of the data that was out there, was the opinion of many of the UN or other sort of agencies that look at this. And this is interesting because this is where you can actually do your own research. So as a team, we went through the defense procurement documents of the Indian government. So you can see what they're buying. And sure enough, there amongst the details, this company was still producing this platform and it was still being ordered. So what do? You go back to the company, you engage them and say, are you still doing this? You have a conversation with them. Is this a mistake? Et cetera, et cetera. And then you can make an investment decision based off that. But again, it's very, very important that you do your own research. You cannot rely all the time on external vendors externally because they do not get it right. In fact, a lot of times the data is out of date. One more example I wanted to give you on that, just to give you an idea of the diversity in this. Just a couple of weeks ago, I was having a conversation with a Korean company on human rights. This company had been operating in the Peruvian jungle, believe it or not, and had a human rights violation against them. And what had gone wrong, they were operating and building a base in the Peruvian jungle, and a local tribe there had specifically asked not to have any contact with the outside world. But unfortunately, when they built their base, they kept bumping into them. It wasn't intentional or whatever else, but that's what was happening. So again, it got flagged to us. It came back up to us. We had a conversation with the management team about what are they doing to stop this from happening again. You may not say that's material for what is a multi-billion dollar company, but how that company reacts to that engagement and what they put in place tells you an awful lot about their attitude towards this sort of stuff. The last couple of slides I wanted to touch on was just how we do this from a data perspective. Some of you may or may not be familiar with Aladdin, but Aladdin is one of our risk management platforms. We run our portfolios through it. A lot of what we do on this, from an ESG perspective, is all integrated into our Aladdin platform. So part of what we do on this is utilizing technology and making sure that all the data we get, whether it's perfect or not, can at some stage be used by us in our platform. So I spend once every month, I sit down with what's called our PAG team, which is our Aladdin development team, and we talk about how can we make this better from a technology perspective in terms of using things like the data that MSCI Price Sustainalytics provides, and making sure that we're using it in the correct way and understanding what's coming out of it. Because this is important, because a lot of what's going on now as people are going up the learning curve is they're relying on these external vendors, which, to be honest, do a very, very good job at aggregating data, but you have to know how to use the data. I'll give you an example. One of the portfolios that we constructed when we were early through this process, from an ESG perspective, we put it together. We deliberately had no fossil fuels in it, which you would think, from an MSCI perspective, when you're rating it relative to their index, would give you above average environmental score. No. It had a worse environmental score than a portfolio we could construct that had some of the world's biggest polluters in it. So understanding what MSCI does with that data and how their indexes are created is very, very important. The reason being that all of these scores from MSCI are based off their sector specific, so they're not comparable across sectors. In this incident, what it threw up was we owned one bank. One bank in this portfolio that operated in a country that had in the past lent to a palm oil company. So that blew the entire environmental score out of the window. It was a useful exercise for us because we could then go and engage with that bank and say, well, what are you doing with this now? And we learned that the data was actually out of date and they're actually not much more advanced in their palm oil lending than they were before. But like I say, when we use Aladdin, we're putting this data in there. You have to understand how to use it. Otherwise, you can end up with some very, very adverse outcomes rather than just running your data or relying on an external vendor. The last thing I wanted to give you was just, this is sort of putting it all in together and our reporting standards. So as a portfolio manager, how can we monitor what we're doing in terms of, are we good at this, are we bad at it? Is my portfolio good, is it bad? We try and pull all of this in together into our systems so we can monitor or give the tools to the portfolio managers and the analysts so they understand the risks that they're taking in this area. Because one thing I think the asset management industry has got very, very good at, and our RQA teams, risk quant and analytics teams, we're very good at measuring traditional risks. You know, we know when we're overweight one sector. We're very good at measuring financial risks. What we're very bad historically at measuring has been what I would call credibility risk. So when we're managing ESG portfolios, we're dealing with another set of risks we've never had to deal with before. So as a portfolio manager, if I would have a quarter of poor performance, I wouldn't be happy, but I get another shot at it in the next quarter, and more often than not, hopefully we can pull it back. The difference with running ESG portfolios, if you have a credibility issue, you're done for. It's very, very difficult to restore that credibility once you're there. So a lot of what we do with Aladdin and where we're trying to build is build it into your process. Get it in your process so know the risks. You'll try and understand the risks that you're taking from an ESG perspective. You won't always get it right. You will make mistakes. But at least if you can show that process and you can have the reporting and a customized way of doing it, you can try and minimize those mistakes. And in future, maybe even pick up on mistakes before they happen, which can help prod companies in the right direction as well. So that's kind of all I had for you today, I think. Yes, so I've done my best to get us back on time for you. I don't know if you've got time for questions or... Please. It's a good question. So the question was, are there any circumstances when we would invest in a company with poor ESG as an ESG fund? I think the first thing I would say there are exclusions, places where we wouldn't go. And this would basically be off we have our BSI baseline screens. So for example, many people would screen out from day one, coal and certain fossil fuels. So those areas we wouldn't necessarily go to. Then you get into more difficult issues. So what about gambling? What about alcohol? What about these other different areas which may be acceptable in some societies and not in others? And then it varies. It's very much about the fund itself. One way you can get around that is have a mission statement on those different issues. So say, okay, when it comes to alcohol, this is our approach. Or when it comes to oil companies, some will exclude them totally. If you want oil companies, what are the rules you have for investing in those companies? Do they have to be industry leading? Do they have to be driving a move away from carbon intensive things? So there are a number of ways you can do it. The other thing I would say is that would we invest in companies that have below average ESG? And this comes back to that point on directionality. If you just invest in the best companies in the world on this, you're not going to really drive much change, would be our approach. If you go to the companies and you have a conversation with their management teams and you go, okay, you're not doing this, this, and this well. If you did this and this would potentially be the outcome. You can have that conversation and move them in the right direction. So if we were looking for the fund that I run and I look at, one of the discussions we've had is it will always have an above average ESG score. That's absolutely set in stone just because of what we do. But maybe 30% of the portfolio can be invested in what we'd call improvers. So the important thing then to do is have that dialogue with the company. What do you want to see improve? And then you monitor it over time so that you say, are they doing it? Are they doing it? And if they do start doing it, great. If they don't, then you have to have the conversation and potentially divest. I'll give you an example, a Middle Eastern healthcare company we've been engaging with recently. Corporate governance issues, 1 or 2 short seller reports, never good to see. We talked to them. We said, these are the issues you've got. We met the non-execs. We spoke to the company, and there's been progress. There's been a new incentive scheme for management. There's been more disclosure. So for us, that's probably more beneficial than just saying, well, we're not going to touch it. So we'd never say never. There are some hard lines, obviously, in this, and each strategy will be different depending on what the individual investor wants. But our approach from a directionality point of view is to try and improve things. But that's not a comment for BlackRock as a whole, to be clear. That's specific to the strategy that I run. There are a whole range of different strategies I hope I showed.
มีคำถามเพิ่มเติมไหมคะ Any question?
Is it a bit more difficult for passive funds to actively integrate ESG into the investment process?
Yeah, it is. I mean, is the honest answer. And I think this is how BlackRock communicate this is very important. And maybe we've not been good enough at communicating this in the past because by nature, passive funds can't divest if they see something going on that they don't like. That decision is made by an MSCI. So the way we try and deal with this is we mentioned with the stewardship team. So we have this very well-developed stewardship team and process now where the stewardship team's job is to have those conversations with the management teams if things are within and represent the firm and the asset as a whole. I would represent the funds that I run, so I would be able to vote against certain things for those funds. What the stewardship team do is has those difficult conversations for the index funds. So those conversations do happen to try and move things in the right direction. And where BlackRock isn't happy with the way things are going, as our fiduciaries, we will, in certain circumstances, vote against boards, etc., at AGMs.